Honorable participants of the 7th EIOPA Annual Conference, ladies and gentlemen. Since its establishment, EIOPA has continuously played a central role in keeping insurance, reinsurance and pensions markets in Europe safe, stable and healthy. Insurance and pensions markets are fundamental to our economy, and their failure would have serious consequences for people's lives. Millions of consumers entrust their savings to pensions funds, and countless households and businesses depend on the insurance sector to hedge against risks. Almost 2 years ago, a major revision of EU insurance and reinsurance rules, Solvency II, entered into application. The industry had to adjust to the new rules, and this against a difficult macroeconomic setting with historically low interest rates. But overall, the phasing in of the new rules has been smooth and successful. I would like to thank Chairman Gabriel Bernardino and the EIOPA staff for the work in preparing many legislative acts and for the excellent cooperation with the Commission. Despite the fact that Solvency II fundamentally overhauls the rules, they remain proportionate and risk-based. And this will also be our main objective in the ongoing review, to which EIOPA is providing important technical advice. With the post-crisis legislation behind us, EIOPA is now understandably shifting its main focus from regulation to supervision. Only a few months ago, the Commission put forward its proposals to revise EU supervision. We want to improve the governance of the European supervisory authorities, facilitate their funding, and enhance their ability to achieve supervisory convergence. For example, these reforms would help EIOPA promote convergence in validation of insurance groups' internal models. EIOPA would also set EU-wide priorities for supervision. The review of supervision is part of our ongoing work to build the Capital Markets Union. We need to support jobs and growth by increasing the flow of capital to productive investment in our economy. The pensions and insurance sectors already play an important role in providing funding to Europe's economy, but this role can be further developed. One objective of the Capital Markets Union is to incentivize increased investment in key areas such as infrastructure. That is why we have already adjusted prudential requirements for insurance companies to invest in infrastructure projects and corporates. And we will shortly do the same with regards to high-quality securitization. Recently, the Commission proposed an EU label for pan-European personal pensions products, or PEPs. These products would unlock savings currently lying idle on low interest rates accounts and put them to more productive use. PEPs would constitute a portable pensions product in the EU and could double the growth of private pensions market. EIOPA would play an important role in the accreditation as an accreditation body for PEPs to make sure that EU's private pensions label is built on solid grounds. I am grateful for EIOPA's valuable input for this proposal. I would like to end by focusing on an increasingly important factor of our work, namely sustainability. There is a clear and urgent need to mobilize private investment towards green and sustainable goals. The pension sector is already a model for others. As of 2019, the revised directive on occupational pension funds will bring sustainability considerations into their internal governance and public disclosure. And our proposal for supervisory review would require European supervisory authorities to integrate environmental, social and governance considerations in their tasks. I have convened a high-level expert group on sustainable and green finance, which will present its conclusions early next year. The Commission intends to follow this up with legislative proposals, and I'm confident that we can count on EIOPA's support to promote sustainability in supervision. I look forward for continued good cooperation and wish you a very successful conference. Thank you very much.